and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie in for Francine here at our European headquarters in London. We check in pre-market on Qualcomm on the story that ARM has pressed arguably the nuclear trigger on their debate over and their conflict and disagreement with Qualcomm over intellectual property and licenses, ARM threatening to scrap a license for Qualcomm. They've gone ahead with that. They have a period of time, Qualcomm, to respond. This is linked to a license that would allow and allows them to design particular chips. The disagreement goes back some time, but Qualcomm pre-market down at 5.3% on the back of the news that ARM plans to will be cancelling that chip design license, again, in a major escalation of the dispute between these two major players in the semiconductor space. So we'll keep an eye on the Qualcomm story for you, of course, through this day. Now, Blackstone CEO Steve Schwarzman says the US is likely to avoid a recession regardless of who wins the presidential election, as both candidates have policy proposals that drive growth. Joining me now is Kiran Ganesh, a multi-asset strategist at UBS Wealth Management's Chief Investment Office, for a deep dive on these markets. And we'll start then on US politics. Kiran, thanks for joining us. Do you want to lean into the Trump trade that has suddenly come back to the fore in recent days?
Well, we've certainly seen a strong rally in a lot of companies that would likely benefit under a Trump administration, and that has gone in line with the increase in the probability of Trump winning, both in the polls and in the prediction markets. We would be a bit more selective about, who are some of those potential winners, though. We like the financials in particular because while there is still uncertainty about the election result, we don't think they're fully pricing in a potential deregulation outcome which could come under a Trump administration. In contrast, of course, they may face higher regulation under a Harris administration, but we think that given where valuations are, they look like an attractive play. So we're leaning into the financials. Utilities is another area that we like in the US that could benefit from higher power demand as well if the economy remains strong. So we're being a bit selective. Advising investors not to make too large swings based on an election outcome because, of course, there is still a lot of uncertainty, but we do see upside for markets regardless of who wins.
OK, that takes me on to the broader question, actually. So you favour financials, you favour utilities. You step back, though, and your advice to clients would be stay invested despite the expected volatility around this US election. Is there not a case, Kiran, to be putting some money, parking some money on the sidelines until we have more clarity on the US political scene?
Well, I think if you look historically, markets have tended to rally both into and after US elections, and it's been sitting on the sidelines, which has been far more costly than variations you might get based on who might win. And if we look at the bigger picture with the Fed cutting interest rates, even though the economy is doing very well, that tends to be a very positive force for markets. If we look historically, you've seen 15 to 20% returns over the next year when we've had that dynamic. So we think it would be a bit unfortunate if investors, out of fear for the election, are missing that bigger trend, which is lower interest rates and a strong economy, which is supportive of equity markets.
Kiran, we're seeing a repricing in the bond market. Do we expect to see a repricing in the equity market?
Well, bonds have been selling off, in part because of that stronger growth, in part because of some repricing for the Fed. And when we look at equities, that same economic growth is driving really substantial growth in corporate earnings. I mean, we've seen just over the past 4 or 5 years that US corporate earnings have doubled, and we're expecting to see another 11% earnings growth this year, high single digits for next year as well. So that earnings growth, we think, will continue to power markets higher. Of course, if yields do start to move significantly higher from here, if the Fed is forced into re-hiking interest rates, then that would be a more negative picture for equities. But we think that the dynamic today of inflation coming back towards the target, rates coming down and the economy remaining strong is pretty much a Goldilocks environment for stocks. And we're looking for the S&P to hit 6,600 by the end of 2025. So that's around about a 15% return from where we stand today.
OK, up 15%. end of 2025, 16,600 on, or 6,600, I should say, on the S&P is the target, is the forecast by the end of 2025 for you and the team. Is, for the here and now, at least the upcoming Fed meeting in November, if they pause, as the likes of Torsten Slok suggests at Apollo, are the equity markets at least vulnerable to that scenario?
There will be some volatility, and I think we do need to expect that in November. Uncertainty about what the Fed might do. The election will lead to some volatility. I think that's for sure. I think the key point for us is that investors should be using that period of volatility to think about how are they going to deploy cash that they have on the sidelines for the next year and the next years ahead. So that's where we are focused on equities. I talked about financials and utilities. AI stocks, which may face any volatility around that as well, we think are interesting. So using periods of volatility to deploy capital into those areas, as well as into some high quality bonds, which we like at the shorter end of the curve, and we think is what investors should be thinking about as we head towards the end of the year.
OK, Kiran, let's take a listen to the ECB President Christine Lagarde, who's been speaking, of course, to Francine Lacqua on the outlook for inflation. Let's listen into the soundbite, and then we'll get your views on how to position in Europe.
I think we are all confident that 25 is the year when we reach our target on a sustainable basis and with the medium-term caveat that I have mentioned. But we have to be attentive to everything.
OK, so the ECB head suggesting that they are making progress towards that 2% target. There will be further cuts from this European Central Bank. How do you factor that in when you're thinking about exposure to Europe, Kiran?
Well, I think the ECB is probably approaching the inflation target a bit faster than they might like, actually, because we're seeing clearly greater signs of disinflation in Europe than in the US, and the economy generally performing weaker in Europe than in the US. Nonetheless, that does give the ECB the flexibility to start cutting interest rates, and that should be a supportive factor for equity markets in general, and we are looking for upside for European equities in general. I think the question when it comes to Europe is, are there the high-quality companies that are going to really capture some of that structural and secular upside you're getting from some of these big trends playing out in the world at the moment? And the answer to that, unfortunately, is not so much. So that's why we tend to focus more towards the US, because you've got those higher-quality companies. And where we do see some opportunity in Europe is in the small and mid caps, because they would be quite exposed to lower interest rates. Of course, they are reliant on bank lending, and if interest rates do come down, that should be positive for their profitability. So small and mid caps is a focus in Europe.
OK, small and mid caps in Europe, a target of 6,600 for the S&P by the end of 2025, with a tilt maybe to utilities and financials, with US politics maybe a factor as well in the months ahead. Kiran Ganesh, thank you very much indeed for the analysis from UBS Wealth Management's Chief Investment Office. Now, a severe E.coli outbreak tied to McDonald's Quarter Pounders has made dozens of people unwell. You can see the pre-market move on the back of this story, down 6% after the losses as well. It came through yesterday. Pre-market down 6%. Now, these cases mainly in Colorado and Nebraska. One person died as a result of this, is what we're hearing. That's according to the U.S. Centers for Disease Control and Prevention. So there's, of course, the impact on consumers, and then the impact on the stock itself. Let's bring in Bloomberg's Kriti Gupta, who's been looking at the story for us. What is the latest, Kriti?
Well, I mean, you outlined some pretty scary stats there. And, of course, you are seeing the CDC and the entire McDonald's sphere really try to address this problem at the core before it spreads largely. That does include looking at some of their suppliers. And it looks like they've narrowed it down to one onion supplier specifically. They've come out and said, look, these are the other burgers that are not actually affected by this. The running against, of course, the precedent that some of the other fast food chains have set, which is like Chipotle, for example, in 2015, or Wendy's prior, because especially in this region, affordability of McDonald's is something that is key to the company. So suddenly, if this is something where you do actually lose customers and lose the appeal of that, it is hard to win back those customers. And this is really where McDonald's is kind of racing the clock here in terms of putting that quarter pounder, which, by the way, is a very popular item for them, back on the menu, and really kind of erasing some of the damage this has done in people's minds.
Is it important to think about where the location, in terms of the states where this happened? And obviously, in terms of McDonald's, they've been in the news as well, in terms of their links, at least Trump using one of their venues in his election campaign. Tie all of that together for us.
Yeah, I mean, they seem like two separate stories, but this is where I think the cultural component is so important here, with that McDonald's, one, because of its affordability, but two, because it is seen as kind of this quintessential American meal that every maybe kid has growing up, especially in a part of the country that is away from the coast. And this is why this outbreak is so important, because it's coming in part of the country which is kind of west of the Midwest, if that makes sense. So kind of Colorado and the states around it, where, again, that affordability question is so crucial. So this dynamic of really appealing to mass voters or mass America is less consequential on the East Coast or the West Coast and more in the Midwest, which is, again, why McDonald's is racing against the clock, but also why you've seen the likes of Donald Trump and Kamala Harris, by the way, who has worked in McDonald's prior, really addressing this audience because it is seen as such a kind of a stalwart of American culture.
Right, very interesting. What's happening on Starbucks? Because they just seem to have problem after problem in the US, but also in China.
Yeah, it's interesting. I mean, they seem like two separate stories as well with McDonald's and Starbucks, but I could argue that these are two companies that have a lot of exposure to international markets. You see that in the McDonald's index. I think the economists used to have the Big Mac index to talk about currency exposure. Well, Starbucks has the same issue. They're trying to get bigger abroad. Apparently, people abroad don't have the same appetite for sugar that Americans do. Surprise, surprise. But you are seeing them suspend their 2025 guidance. A lot of that really pointing to expansion efforts in China that have not fully paid off. But then they talked about weakness in the American consumer as well. You're starting to see the issues that you've seen in Europe and in China start to seep into the United States as well.
Yeah, and you know, they have real competition in China as well, with some of those homegrown efforts as well in terms of the Chinese startups in the coffee space. Kriti Gupta, thank you very much indeed. And you can see the pre-market move there on Starbucks as well. Two crucial stories for us on the corporate front today. Talking of the earnings story, coming up, Deutsche Bank plans to restart share buybacks after strong revenue in its investment bank and settling a legacy dispute. We're going to discuss that next. This is Bloomberg.
Season is here.
And once again, we find ourselves asking whether the earnings season can live up to expectations.
Bloomberg is first to break the numbers.
Just crossing the terminal, we have results from Heineken.
Getting SoftBank out. Glencore numbers are dropping as well.
I'll quickly mention Diageo because those numbers are coming out.
Smashing the estimates.
With the smartest insights.
What are you most looking forward to the second half of the year?
We've lifted the margin guidance for the year, so it's going to be good.
We will, of course, be bringing all the details.
Continuing coverage on Bloomberg.
So we've got to get back in line. And so they're on that path. They were late to the game. They got to make sure they don't go too hard now. And that's what they are all trying to figure out watching the data.
And that was Bank of America CEO Brian Moynihan speaking exclusively to Bloomberg in Sydney. Let's cross over to the European banking space right now, where Deutsche Bank's third quarter revenue from fixed income securities and currencies rose 11%, outperforming its peers. The German lender also plans to restart share buybacks next year. Despite that, as you can see, shares are down this morning, a little over 3%. Let's dive deeper into this story then with Bloomberg's Oliver Crook in Frankfurt. Ollie's been speaking to the CFO of the bank. Ollie, what were your key takeaways then from the results?
Yeah, so listen, Tom, I think that what the key takeaways, at least for the investors, has been is a lot of questions around the provisioning and some of the increased provisions that we got from Deutsche Bank. A little bit of ambiguity, frankly, as to what that was all about. They said that there were a couple of defaults in their portfolio, and that is what was sort of leading them to up their provisions, which, again, appears to be what the market is focusing on today, with shares trading down about 3%. But as you say, Tom, overall, this was a fairly positive quarter in terms of the actual results. FIC up 11%. That becomes the bank to beat in terms of all of the reports that we got out of the U.S. Bank of America was the only one that came anywhere close to levels like that of FIC, and that was only 8% growth. And also their origination business and advisory business up 24%. So those were all sort of positive. And again, also confirming in that interview that they will begin a buyback early in 2025, and that is after they got some money back from the provisioning that they'd put aside for this post-bank litigation, which, as we know, is still ongoing. We just had a ruling from that, which has sort of been priced into the stock, which has really not been moving things. But those are really the takeaways from the numbers themselves.
And Ollie, look, you've been speaking to the CFO, von Moltke, of course, and one of the subjects you touched on was, of course, M&A in not just the German banking space, the European banking space. You put to him that question around Commerzbank building out that stake, or UniCredit building out that stake, I should say, in Commerzbank. Give us some details in terms of the colour. What was the kind of response that you got from the CFO of Deutsche Bank and what seems to be an emerging theme now?
Yeah, absolutely. It's an emerging theme and is really brought home because this is just down the street, Commerzbank, right? And UniCredit coming in and trying to sort of purchase it against sort of the apparent wills of the German government and Commerzbank itself. And obviously this will bear on Deutsche Bank's strategy and really force them to evaluate what space they want to occupy, both in the German market, but also in the European market going forward, if this is going to be the sort of story of consolidation. So I put it to James von Moltke, the CFO of Deutsche Bank, in terms of how it's bearing on their strategy. Have a listen.
We've been, I think, pretty consistent in saying the industrial logic for bank mergers makes sense, but that we needed time to be fully ready, and that time hasn't come. And so we're focused on executing our strategy, focused on delivering against promises we've made to our shareholders and stakeholders. And it's sometimes nice not to be distracted by other things and just execute, as I think the third quarter and the year to date showed that we've been focused on execution.
But then I guess, if this were to go through with UniCredit and Commerzbank, it would make an entity larger than Deutsche Bank. We've obviously had consolidation in the Swiss market. We also have BBVA, Sabadell. So this is really a moment for European consolidation. I imagine that makes you sort of reflect on your position, not only within Germany, but within Europe. Where does Deutsche Bank what spaces they want to occupy in that landscape, in a landscape that is more consolidated with bigger banks?
Well, let me start by saying we intend to remain number one in Germany, and we think that consolidation here doesn't really change our competitive landscape. Germany is a very competitive market as it stands, and we compete against both Hypovereinsbank, that is UniCredit, and Commerzbank in our home market. So that doesn't change much. But your point is one that we agree with. We think Deutsche Bank is positioned to play a leading role in European consolidation. We think that scale in banking, especially in the regulatory environment we live in today, is something that's important and something we observe, again, in competition with our U.S. competitors as a strength. So in time, absolutely, we see that taking place. And sometimes the first few transactions sort of set off a wave, and I think that's what you're getting at. And we certainly believe that begins.
And so, Tom, what I think is interesting here, and a shift from what we've heard from James von Moltke and Deutsche Bank in the past, when I've asked them about this consolidation in the sector, they said that before there's a banking union in Europe, there's sort of limited upside. What Andrea Orcel is doing with this bid for Commerzbank is sort of the concept of build it and they will come. Build the bank and the union will come. And that is forcing Deutsche Bank to really rethink how they're going to go about consolidation in the future.
Yeah, look, Ollie, another topic that clearly is top of mind for a number of corporate executives, wherever you are in the world, is US politics. Did he have anything to say on the US election? Yeah, listen, I think there are 2 points to make here. The first is about trading and the revenue. When you have a very volatile time, they expect that the volatility around the U.S. election to really help that side of their business. But I think when you look on the sort of fundamentals and you look at the German economy and a lot of the companies here in Germany, they are very dependent on the U.S. economy. Now the U.S. has overtaken China as the biggest trade partner with Germany. If you get 10% tariffs, that will have a material impact. Bloomberg's Oliver Crook, thank you very much indeed. Now, from Germany's biggest bank to the wider economy, we're going to be talking to the country's finance minister, Christine Lagarde. That's at 2 p.m. London time today. Coming up, Roche shares are higher after topping sales expectations more than a year into the overhaul of its research and development units. More on our interview with the chief executive. That's coming up. This is Bloomberg. Welcome back. Let's check in on some of the market movers and some of the stock reaction on the back of the earnings that have come through thick and fast, of course, this Wednesday for you. L'Oréal with a miss, and you can see the impact there, down 3.8%. Akzo Nobel, the paint maker. Top line, it was a beat. Investors, though, disappointed, and you can see the drop there. Roche Holdings currently flat. Fuel, maker of bike racks, there you go, currently surging up 11.9% on a beat when it comes to their earnings. Plenty more coming up in terms of chips. Stay with us. This is Bloomberg. Good morning, welcome to the Pulse. I'm Tom Mackenzie in London. These are your top stories. The global bond sell-off continues as investors bet on a slower pace of US rate cuts. The dollar gains against all G10 peers. Bank of America Chief Brian Moynihan urges the Fed not to, quote, go too hard on rate cuts in our exclusive interview. Plus, McDonald shares fall pre-market after its quarter pounders are linked to a severe E.coli outbreak in the US. Now, Bloomberg has learned that ARM is cancelling a licence that allowed Qualcomm to use its IP to design chips, escalating a legal dispute that threatens to disrupt the smartphone and PC markets globally as well, if it comes to that. The move ratchets up a legal fight that began when ARM sued Qualcomm for breach of contract and trademark infringement back in 2022. Let's bring in Bloomberg Intelligence litigation analyst then, Tamlin Basin, for the details on it. How did we get to this point, Tamlin?
Yeah, well, Tom, we got to this point back when Qualcomm decided to acquire Nuvia. This was back in 2021. Now, Nuvia had a license from ARM that allowed it to customize its architecture. It was trying to get into the chip market for PCs and servers. Qualcomm purchased Nuvia, and after that, ARM said, well, we don't like you using the terms of this license that we granted Nuvia. You can assume that that was at a lower rate than it charges to Qualcomm, its biggest customer. It tried to terminate the Nuvia license, and then it additionally sued Qualcomm for breaches license, saying even the chips that were designed on that Nuvia license, you can't use to continue building chips. So that's why we had the lawsuit in 2022. And as you said, this is an escalation. This is kind of the escalation of all escalations. This does really threaten to roil the entire chips industry. We still believe that this probably leads to a settlement. There is a trial upcoming later this year between these two parties.
Okay, the escalation of all escalations. So someone's got to blink.
Someone's going to blink, absolutely. And right now, we see the move that was reported by Bloomberg as really a move by ARM trying to gain leverage in advance of this trial. Now, these parties, they filed motions for summary judgment. We're still waiting on those to come out. But really, we see this as them trying to gain leverage in advance of that trial.
It's a reminder as well of the complexities when it comes to the semiconductor industry and disputes over intellectual property. And this goes back decades, doesn't it? I mean, ARM saying that they need to destroy some of their earlier designs, it seems, for Qualcomm. Just in terms of the broader market impact then, so outline for us how this plays out in terms of legal terms in the next, say, 60 to 90 days, and then maybe the broader market impact if it isn't resolved.
Sure. So I think this will play out is if the reporting is correct. What's going to happen is most likely Qualcomm's going to file some legal notice saying that actually no, most likely our contract terms are not going to allow you just to withdraw the license. Now, this is unfortunately going to be litigated all in terms that are probably not going to be disclosed on the court docket. So a lot of this is going to be negotiations playing out sort of behind screens and redacted filings. But what's going to happen is there's going to be a fight within the legal fight over whether ARM is going to be allowed to withdraw this license. This is all continuing to lead up to this December 16th beginning of the trial date. Now, in terms of the broader impact, this of course doesn't just impact Qualcomm. This impacts all of Qualcomm's customers. So this does have potentially profound ramifications for the entire chips industry.
Okay, really smart analysis, Tamlin. Thank you very much indeed. Tamlin Basin from Bloomberg Intelligence litigation analyst on the details around this continuing dispute that's escalated, as he was describing. We'll count down to that court trial then and the case set for December the 16th. Now, to US politics, the New York Times is reporting that Jamie Dimon privately told associates he supports Vice President Kamala Harris and would consider a role in her administration. The paper adds that Dimon will not express his support in public over fears of blowback. And Donald Trump has promised tax breaks for car purchases, but only for vehicles made in the US. Trump did not specify whether the tax breaks will be available to many foreign-owned car makers who produce millions of vehicles in the US, including VW and Toyota. In addition to tax breaks for car buyers, Trump has pledged to impose steep tariffs on cars and other products made in Mexico, China and other countries. And in more Donald Trump news, the former president has accused UK Labour Party members of, quote, blatant foreign interference for campaigning for Democratic presidential rival Kamala Harris. Let's get more on this story now with Bloomberg's EMEA News Director, Ros Matteson. Ros, how do we get to the point where Trump is taking potshots at the Labour Party over election interference?
Well, it's all part of the messaging that Donald Trump is really giving to his core supporter base with, only a few weeks left to the US election. and that is this idea that there's all these groups and sort of campaigning against him from the outside and working against him from the outside. And the latest one, as you say, is in fact the UK Labour Party for what he says are illegal campaign contributions to Kamala Harris. And this is actually a practice that is really, really common around the world, not just in the UK and the US, but many other countries and many election campaigns. And that is that, parties send campaign workers over to another country during an election campaign to work on a volunteer basis for those campaigns. They cannot be compensated. And the idea is they watch and learn from those campaigns. They see what works, they see what doesn't. They bring that back to their own country. So it's entirely normal practice. And in fact, Steve Bannon on the other side of the coin in the US has often had, entities set up to have people come and watch elections and work on campaigns in Europe for the far right, for example. So again, it's entirely normal. But for Donald Trump, it is a way to, again, raise that point with his support base and with voters saying there are lots of forces outside the US urging against him and campaigning against him.
And I guess from the UK perspective, a key question is to what extent this damages the relationship between the UK government and a potential new president of the United States, Donald Trump, if he wins in November. What have we been hearing from Keir Starmer, our Prime Minister, in response to this?
Well, Keir Starmer is saying it won't affect the relationship. In fact, he did meet with Donald Trump only last month for a couple of hours in the US. He says he'll work, obviously, with whoever is president, but it may not be as simple as that because we know that Donald Trump is a very transactional person. He also is, very much personality-based. It depends how much he gels with someone one-on-one. We saw that he did have that relationship with the former UK Prime Minister, Boris Johnson. He didn't have it, for example, with Theresa May. And so again, Keir Starmer and Donald Trump are two very, very different personalities. Can they form, that rapport that Donald Trump tends to lean into? At the same time, Keir Starmer is a pragmatic individual. He's had a lot of years of practice at this. Maybe he can navigate that relationship. But really, for any leader, if Donald Trump becomes president, the reality is that he views all countries, allies and adversaries alike. He views them as competitors. And so that relationship will become more fraught, at least on the trade front, either way.
Yeah, potentially a topic or at least a discussion point or something to adjust to for many global leaders if Trump wins in November. Bloomberg's EMEA News Director Ros Matheson, thank you very much indeed for the update. Coming up, ECB President Christine Lagarde says she sees a clear direction for rates, but the pace of cuts is yet to be decided. More from our exclusive interview next. This is Bloomberg. Welcome back. Happy Wednesday. I'm Tom McKenzie in London. Now, in a wide-ranging interview at the IMF meetings in Washington, ECB President Christine Lagarde has spoken exclusively to Bloomberg about inflation, rate cuts and Donald Trump's comments on tariffs and the Fed.
At the moment, we are not totally unhappy with what we see because it looks very much that inflation is on the right track of disinflation. We come from very high numbers, as high on average for the whole of the euro area as 10.6%. And the latest reading we had for the inflation in September was 1.7. So, those numbers are relatively reassuring. They are only a number, and we're not looking at one data point, as I have said repeatedly. We're looking at a lot of data to make sure that this disinflationary process continues to be well on track. But, we also have to be cautious. And we cannot jump to conclusion that, okay, done deal, we've broken the neck of inflation. No. And I think caution leads us to look at all the data that are coming in, whichever form it takes, whether it's survey indicators, as we had a lot of that in September, or whether they are more modeled, derivated as when we have projection exercises. And we will be looking at that and continue to be data dependent, but of course, cautious and not jumping to conclusions.
So when you look at inflation, could you achieve your target a little bit earlier than expected?
That would be my hope. You know, if our target is 2% medium term, and I'm absolutely confident that we will reach that target sustainably in the course of 2025. Is it going to be early in 2025? Is it going to be very late in 2025? I think it really will be determined by data, by the state of the economy, by energy prices, by the transmission. You know, we look at three components. We look essentially at inflation outlook, we look at underlying inflation, we look at transmission of our monetary policy. And on the basis of that sort of three pillar analysis, we can assess whether we are definitely on track and when.
I was going to ask you, so we recently had an interview with a U.S. presidential candidate who said tariffs was his favorite word. Mm-hmm. I imagine because of also your background, former IMF, former trade minister, this is not your favorite word. What is your favorite word?
I think fair trade is a key boost for growth, for employment, for innovation, for productivity. And I would say that it's something that we should not throw away, because in any period of time where this country, the United States, has thrived, were periods of trade, not periods of I'm going to retire behind my boundaries and play at home. No.
I mean, there was a big UK media outlet that called the US economy the greatest economy on earth right now. I mean, would you agree with that? Where does it leave the rest of the world?
I think it depends where you are on the social ladder. I think you have to go further than look at the sort of aggregate numbers or the average numbers. It depends on where you are on that ladder. If you are at the bottom of the ladder, if you have small job, not much by way of income, I'm not sure that you think of, being in the first and best economy in the world. So everything needs to be considered. But it's a case that the US, for instance, has very high productivity, has a very vibrant tech sector, and has had it for a long time. So it has capitalized on it since the beginning of the 21st century, and that there is a lot of catch-up taking place at the moment. But I think you cannot look at that in isolation. You have to look also at the people. And I think if you look at the Gini coefficient, which is probably not the best way to measure inequality, the US is not doing so well from that perspective. So it's also a question of spreading and distribution so that all people can benefit. Sorry, I'm being political now. Forget it.
But do you worry about central banks being political or being dragged into the political sphere?
No, because I think there is a huge resistance to that in the decisions that we make, despite what is being suspected here or there in any place in the world. And I think for those central banks which have the privilege of independence, either by virtue of the treaties or the tradition, it's critically important to hang on to it and to defend it, because the credibility of an institution like a central bank really is a factor of how independent it is vis-a-vis the politics. And it's precious. It's very precious.
But do you think that you'll come under attack more? Not you personally, but just central banks. Donald Trump said, Jay Powell had the easiest job because it's a flip of a coin every month.
He should come and visit us. And I have thousands of hardworking people, economists, jurists, computer scientists, and I can assure you that they work super hard every day, not just once a month.
OK, not necessarily the easiest job in the world. ECB President Christine Lagarde speaking exclusively to Francine Lacqua, of course, Bloomberg. Let's bring in Bloomberg's Valerie Teitel right now to dive deeper in terms of what is top of mind for Christine Lagarde, the ECB. She seems, Valerie, pretty convinced they get to that 2% target next year. She didn't give an exact time frame, but it lands next year, and she's pretty confident of that.
Yeah, disinflation is on track to hit their target next year. She didn't give a date, as you mentioned, but she did point out the one thing that does worry her about inflation, Tom, Tom, and that is the services component of inflation, the stickier parts of inflation that can be driven higher by gains in wages, for example. And I just want to show here on this chart, this yellow line here is how services inflation has fared over the last few years. And you can tell in the last 12 months, there really has not been a lot of progress in terms of services inflation falling further. So that's a key thing on her mind. It was something she told us last Thursday at her press conference after the decision as well. So the market is going to be focused on this sticky component. But Tom, you could argue that the market is already pricing in the fact that the ECB will have to act more aggressively in the future. If you switch on to my next board, I'll just have a quick discussion on the euro. We have seen the euro weaken over 3% now in the last month. It's on track to weaken, 0.7%, nearly 1% in just the last 3 trading days. We're now under the 108 handle. A lot of this is due to the fact that the market isn't waiting for Lagarde to say that she needs to act more aggressively. They are going to do it for her. We are now seeing a significant chance that she's going to have to deliver a jumbo cut when it comes to the ECB's December meeting. If you flip onto my next board, you can see the rally we're seeing in the front end this moment. We did hear some dovish comments after Lagarde spoke yesterday, notably from Villeroy, governing council in the ECB. He said the downside risks to inflation and growth are significant. So we've been pricing in perhaps a more aggressive path of cuts from the ECB. A lot of that played out in the front end this morning. We're seeing yields 5 basis points lower in the 2-year yield in Germany.
Valerie Teitel, our markets reporter, thank you very much indeed. And I'll reflect on that as well, because we are seeing a divergence. We've been talking about the global bond sell-off, but actually it's a bit of a divergent picture because the sell-off continues, as you can see, for US Treasuries. That's the front end, the 2-year that you're looking at the top of the screen right now at 4.05. Yields up again around 2 basis points. Gilts here in the UK also seeing a little bit of selling pressure, and you're seeing that across from the 2s, the 5s, the 10s, all the way to the 30s with a 3 basis point move higher in terms of the 30-year gilt. But it's a very different picture, as you can see, when it comes to those sovereign debt stories of Europe. As Valerie was saying, at the front end, the 2-year German Bund currently at 2.12, and its bid yields are down 5 basis points at the front end in Germany. And a similar picture in Italy as well, where sovereign debt there at the front end yields down 6 basis points, prices up at 2.57. So money moving into the sovereign debt of Europe, but out when it comes to US Treasuries and UK gilts as well. So a bit of a split picture when it comes to these global bond markets. Coming up, back to the earnings story and the tumult at the heart of Boeing. It's the big day, of course, for the airline maker. The manufacturing giant reports third quarter results today, the aircraft maker, not airline maker. And there's a union vote, of course, on ending the strike action. That story is next. This is Bloomberg. Good morning and welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. Boeing announcing its third quarter earnings. One of your top stories today. Before the US market opens, investors and analysts are looking for the new CEO to lay out his strategy during his debut earnings call. No pressure. Also today, union workers vote on whether to end their strike. Bloomberg's Benny Carmel leads our global aviation coverage and joins us for this essential preview. Benny, it's going to be bad. Just how bad will it be for Boeing?
Well, we already got some of the numbers from Boeing a couple of weeks ago. They announced fairly comprehensive job cuts 2 weeks ago, and as part of that, they threw in some of their earnings as sort of preliminary numbers. So we know it'll be another loss quarter. The sales were not what investors expected, and they'll have a big charge because some of their planes are delayed. They're having issues at defense, the business, and the space business. So the numbers are kind of out there. In some ways, they sort of grasp the nettle. So the focus will be more on the CEO messaging. Kelly Ortberg, the new CEO, he will come with a message to employees and to investors, and it will all sort of be in the tone, you know, how unvarnished might it be? What kind of a vision does he lay out for the future? How deep does he go into the issues facing the company, from the credit rating to the next aircraft? So all of those things is something that people will be poring over. The earnings are out at 7:30 local time. That's 12:30 in London. And then later in the day, as you said, we will get that crucial vote from the workers on the latest accord.
I mean, Benny, you just ticked off a number of challenges that this new CEO faces. So on the messaging question, then, do we have some understanding as to where the priority for Bloomberg will be in terms of his communication to his employees, as you say, and to the markets?
So, yeah, it's a bit of a... He needs to get the tone right. I think the employees obviously are, nervous. We had the job cuts, so they will want to hear from him. How do you reshape the relationship between the upstairs and the downstairs of Boeing, between management and the factory work floor? He's already sort of tried to improve that relationship. He's moved to Seattle. He's walking the factory floor. So he's trying to engage with the humble worker, as it were. But he will have to lay out the future of Boeing as it exists. He made some slightly veiled remarks a couple of weeks ago saying, we can't be everything to everyone. We need to think about what we're good at, think about where our focus should be. And that gives a hint that maybe the Boeing that we'll see in a couple of years will be a more streamlined, a smaller or more focused Boeing. So that will be a big focus for workers, but also obviously for investors today.
OK, and of course, you'll be breaking down those earnings for us, you and the team, and also the decision in terms of the vote when it comes to union workers for Boeing. That's also crucial as well later today. I know you're going to be covering that for us, giving us the context. Bloomberg's Benedict Carmel with the expertise, of course, leading our global aviation coverage. Benny, thank you very much indeed. Another exclusive conversation to look forward to here on Bloomberg TV will be with a LinkedIn CEO, Ryan Roslansky. That's at midnight tonight, UK time. Pre-market, let's take a look at McDonald's on the E.coli challenges facing parts of that business stateside. The stock currently down almost 6% pre-market. Starbucks a miss when it comes to the earnings. They've pulled their outlook. That stock also under pressure. Bloomberg's Danny Berger and Manus Cranney join us next. This is Bloomberg.